Hi, 23rd January 2023, Monday. Welcome back. All right, MAO with Kel. Now, really, we have the tools to bring the inflation down. This is something that I never thought that I can understand this. Okay, because all along we understand that the Federal Reserve has increased the interest rate to 4.25%, and yet the CPI data is now trading at about 6.5%. So how can we bring the 2%? And I tell you now, I may have the answer. But before that, once again, guys, Happy Chinese New Year. Happy to the rabbit year. May all of you strike lottery tickets, toto, whatever you have, and make a lot of money from the market. And congratulations to all the winners for 2022 and beyond. All right. So once again, I wish you all the best, and let's go to our MAO right now. Now, disclaimer apply as usual. Please understand this. Make sure you do your necessary work. And also thank you, Ames, for the kind sponsorship. Right, let's recap what happened last Friday first. Okay. So first of all, you can see that wow, Microsoft up by 3.5%, Google up by 5%, Apple 1.92%, Amazon 3.81%, Tesla 4.91%. Wait a minute. We just have a big off selling on last Tuesday, Wednesday, right? And suddenly things have changed. Now this is the beauty of US market. Whenever things are bad, they have a lot of way to make things happen. And this is one reason why I say that it's better to follow price action than not itself. So what happened last Friday? Nasdaq notches its third straight week of wins. All right, so we're having a interest rate issue running up right now, and people are very concerned yet. But Nasdaq continued to rally. Why? Because last year Nasdaq dropped by 30%, right? So for Nasdaq to recover a bit, it's kind of expected, right? I shared you early this year. So now the thing is this, we are finding a way to continue to move and higher low right now, according to this guy, the CEO of KKM Financial, okay? And apparently, people are getting pretty optimistic, and that is a very concerning factor right now. So Netflix gained 8.5% after posting more subscribers than expected. Now this is pretty good, right? But goodness sake, the quarter earning is so bad that they only make 12 cents for every share itself. This is ridiculous, all right? So this is pretty bad. And of course, Alphabet rose 5% after they lay off 12,000 employees. So you can feel right now that the bad news seems to be good news, right? So is this a start of the bull market, or this is actually the end of this bear market rally? I don't know. I'll leave it to you to decide, alright? But to me itself, I can explain to you now what actually happened on last Friday. So apparently before last Friday, alright, we just noticed that the OPEX market itself, right, has a lot of interesting attributed to the recovery or rally on Friday. So what is happening right now is that there is the biggest mass expiration of option on Friday, the biggest January event in a decade, alright? So basically, right, just let you know, this includes this S&P 500 falling for 3 straight days. The 12th time out of the past 14 months, the index has dropped around the OPX time. So the thing is this, you can see right now, right, this is the OPX week, and the week after that, it seems that it's usually the S&P 500 will trade better. Interesting. So 180 million contract was set to roll over on Friday, and that was the highest in January expiration in a decade. So with so many people so bearish, it's pretty clear, guys. The boys know this, and they whack the market up so hard that basically all these options expire worthless. So that is how it works. When everybody is on one side of town, the other side will happen, and vice versa. So now the thing is this, now everybody is thinking that, okay, coast is clear, time to buy stocks. What do you think? Alright, so from here itself, you can see that the skew was really falling apart, and the thing is this, professional was all betting that things will get so bad, but then Friday the market got fried. So now you understand why itself, when I was talking to you on Friday MAO, I said to be very careful. There could be a chance of recovery if the market is too pressed on to one side. I'll explain to you through the chart later, right? But the thing is this, we can see the Dow Jones now. Let's take a look here. The Dow Jones basically started with a gap down first. You can see it really gapped down. So there were negative 50. And then after it traded even lower, right? Okay, that was for the first hour. Then the second hour, we saw a recovery to about here, which almost closed the gap, but it didn't. So usually when gap can't close, the market will sell. So we saw the selling, we have a brand new low. So as the time itself, we thought that everything is going to go down, right? Interesting. By the time at midnight, the market formed a base, and then after that it went all the way up, retest, but this time around it actually broke the previous cycle high. And then when it pulls back, it didn't go anywhere to the midpoint, which is a very telltale sign the market is going to rebound. And truth be told, you can see the market purposely closed near the low on a 5-minute chart and instantly recovers and bang, all the way strong closing. I'm pretty sure it was based on the last minute buying or the push-up buying to ensure all the puts option expire worthless. Alright, so who wrote the put option? Obviously the boys. So when people are buying it, they read the market go up, then what happened? All the put become worthless. That's a simple game. So one thing is that because now they are saying that China COVID situation has infected 80% of the population, hence therefore there could be a chance in the next 2-3 months there will be no more everybody get COVID infected, then everybody can go back to work and China become a main powerhouse again. So this is what people are saying right now, or at least what they're saying, right? Despite the current infection is across many areas, but they feel that, right, according to Wu Zhunyou, he says that, right, there will be no second wave, okay? He's from the China Center for Disease Control and Prevention, so he's pretty confident. Now, we all know that hundreds and millions of Chinese are going to travel around China for this Chinese New Year period, and obviously that will create a fresh outbreak. But again, this is what we believe. We saw it ourselves, but again, for China, they are saying that they are okay. So what do you expect, guys? So all I can say is this: according to China right now, they should be back on track. So let's hear from Bloomberg on what they has to say about the situation now in China and what to expect from it itself. Let's hear him out.
They have come out with the 60,000 number. It does suggest that they are recognizing the pressure that they are getting, particularly from international bodies like the World Health Organization, from the US in particular, around their COVID data, which has basically been either non-existent or meaningless for the past month. That said, the number they have put out has immediately raised questions. When you're talking about 30 million new cases a day, which is what the government was talking internally about a couple of weeks ago, 60,000 cases a day is not a huge number and is well below some of the modelling that the likes of Barclays and others have done on the amount of deaths that are actually occurring in China. So lots of questions there.
Emma, and the details about the types of people that have suffered fatalities kind of fits in with the broader narrative about how COVID is not dangerous to the broader population, right? These are elderly people, and most of them, in fact, an overwhelming majority of them have these comorbidities.
Yeah, I mean, I don't think that's a surprise given what we have seen when it comes to COVID fatalities elsewhere in the world. That most of these deaths that they're owning to are in over 80, particularly when you think about how low comparatively China's vaccination and booster rate is when it comes to COVID vaccines. It's not a huge surprise that you would be seeing a lot of these people a lot of these fatalities being in that age group, and that is what we're.
All right, so in short itself, apparently the Chinese side is still saying that their COVID-related cases is not that many, about 60,000. And if you Google it itself, it's less than that. But if you look at the main street or off the main street, those YouTubers in China coming out, they're looking at millions of them. So I'm not too sure who to believe, but we all know that this is not as simple as it is. But let's hope that China come back strong and we have a recovery in the global economy. All right, so you can see over here right now, oops, there's some technical issue once again. Just give me a moment to just solve it. Okay, here we go. All right, so what you can see right now, right, the major foreign holders of treasury securities. Now, Japan is still increasing it. Okay, you can see now, October was 1064, now it become 1082. But for China, they are reducing it, and if you look at it from last year itself, China reduced quite substantial. So is it because of the current situation between China and US? We won't know, but we do know that there is something done by US. Blinken is going to pay a long-awaited China visit on February the 5th to 6th, and obviously the main thing is to talk to China regarding how to work together. And of course, we have Yellen all saying that, right, we should consider to work with together so that we can recover together. So all these are showing that China, USA is trying to win over China, and let's see things will develop from there. Right. Now, one thing is that, guys, remember, I was covering this last year. If you can actually change the definition of anything, then the whole exercise doesn't make any sense. Which means that, imagine the word recession. You ask any A-level students and beyond, what's a recession? To define it, we all know that it's a period of temporary economic decline during which trade and industry activity has reduced, generally identified by a fall of GDP in 2 successive quarters. Okay, so if you answer this in a paper, you scored an A. Okay, you scored an A. But the problem is, when it comes to this White House, they actually tell you not really. Okay, so this was covered last year, all right, whereby White House literally say that recession shouldn't be based on that and feel that, right, okay, it's not a real one. Okay, so what's about that? Okay, so if you can change recession, what can you do when Jerome Powell said this? Let's play what Jerome Powell said late last year. All right, let's hear him out once again.
Committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price
stability on behalf of American families and businesses.
So I was just wondering out loud, what does it mean by that? What tool do you have? But now I understand. All right, so let me see this again. Okay, apology on this. I think it's just now I didn't save the last file, but it's okay. Now let me just share this with you. Give me a short moment on this, okay? Sometime this happened, and of course, think about it. I'm probably the only one during Chinese New Year doing an MAO video right now. Okay, all right. So the thing is this: the Consumer Price Index. All right, this is the official website. Apparently, in January 2023, which is today, the BLS plans to update and weigh annually for the Consumer Price Index. Okay, from 2 years become 1 single year. Yes, it's just there. It's just updated. Right? Again, you may ask, what is BLS, by the way? Okay, BLS is the Bureau of Labor Statistics. All right, BLS. All right, it's a federal agency that collects and disseminates the various data from the U.S. economy and labor market. It reports including the Consumer Price Index and the Producer Price Index, both of which is considered to be important measures of inflation. So now the BLS is saying that they are going to change the weightage of this to annual. Now, in case you didn't know, it was done 2 years one time. So we all know that the main driver that's basically stopped CPI data from going down lower is the rent of the primary resident. Okay, so this is something interesting. Why rent? Why rent? Why not the house itself, right? So apparently I dig up more through a YouTuber, then I learned something from here itself. So let me explain this to you. Now, because this was actually considered a last minute insertion, so I think I have didn't really file in my thing properly. Just give me a moment. I apologize on that. Just give me a short one. Yeah, let me just try to do this right now. Okay, here we go. Okay, so apparently, all right, in October 27, 1981, the Commissioner Janet announced that BLS will convert the CPI from all urban consumer to a rental equivalence measure for homeowner costs, effective the data from January 1983. Okay, so what happened in 1983, right? Okay, let's bring it right now, guys. Apparently, in 1983, we have the inflation shooting to the sky. Hence, therefore, Federal Reserve Volcker had to come in and increase interest rate to the sky. And then after that, we have that recession, okay? So that is whereby if housing is too expensive to calculate, they might as well change it to rental. So when you do it in rental form and you increase interest rate, so you understand how it goes now? Not difficult to understand, right? So the thing is this, so now what's happening right now? So again, apologize on this part of the PowerPoint slide because I think I made a mistake over here. Just give me a short moment on this. Here we go. All right. So according to the BLS right now, they are actually from then on, they'll be using 10 years, okay, combination of data to reflect, okay. Now, in 2002, they decided to change it to 2 years, right. So now from 10 years to 2 years. So what happened? Why now to 2 years? So take a look, guys. It's because the Federal Reserve back then in 2002, we have the interest rate going up again. And we have the recession coming in. So that's why the CPI data have to change once again. Got it right now? Very, very familiar, right? So now, guys, think about this. What is happening right now? Think about this. That is why am I pretty concerned of what would happen really very soon. All right, let's take a look. So now the thing is this, they are looking to change, okay, they're going to change it for 2023 because they're going to show that the spending power of people is changing again, so not to mislead the final result. So we all know that when things get expensive, we should have substitute, right? So apparently, right, they're going to use substitution to do the calculation. So with risk right now, it's not going to be difficult, guys. It's not going to be difficult that they're going to move along 2019 to 2020 move spending to 2023 calculation. And from here itself, right, we will know that, you see, every year on the 14th of February, which is the celebration of love, the BLS will celebrate an improvement in the consumer price index so that, okay, that things will become better. So guys, think about this. Why are they doing right now? All this speaks volume, because if you look at the current situation right now, guys, this is the situation here. Let's take a look. You can see right now that we are going to go up, right? Our Fed fund rate is going to go higher. We all know that Federal Reserve is going to go 5.25. So back then the highest was 6.5 back in here. Then it collapsed to 5, so around this area was for 5%. So where we are right now, we are at 4.1%. We're going to hit 5% by this year. So I believe that we are not too far from recession, and the CPI or the BLS is preparing us so that you can have the inflation coming down. So of course, once you start to do such funny things, you're not really speaking the truth. And of course, all we can say is that that is how things get done. All right, so guys, we're going to have a lower CPI data, and Michael Burry will probably get it correct, because he said that before, the CPI data will go even lower. He may go into negative, but when that all happens itself, right, things will get terrible. So tomorrow, I'll tell you what Michael Burry has to say, but this is really clear cut. Now I understand how this inflation number will go down, even though we just saw our Milo dinosaur ice Milo has going up in Singapore. All right, let's see the charts for today and what we have right now. Well, for the charts, we have the Dow Jones recovering. All right, you can see right now, it's trading at 33,428. And we have the strong recovery at the KFC level. Remember, I mentioned to you, 33,031 is a strong technical level. And every time when the Dow Jones come back here, the Dow Jones will always seem to recover. So this is not the first time I'm showing this, guys. From very first day back in November last year until now, it has been showing you very clear cut, guys. This is showing that there should be an upthrust here. But if the market breaks below 33,031, then of course the selling will come back down to 32,550. So this is a very important technical point. You just have to take note. All right. Now the Nasdaq, right? We have a very strong recovery on Friday, and I mentioned to you guys, it's purely a put option slaughter. So if the Nasdaq can go higher, then you'll go back to the KFC level, and that point will be still at 11,774. But if anything doesn't stay on, a pullback, then of course that means this was just a pump to dump. So I just feel that we should watch the Nasdaq closely, because Nasdaq itself is very sensitive to interest rate environment, and last Friday was just a pump and dump in my opinion. Yep. And of course, let's look at gold right now. Gold is now trading lower. Now gold, as I mentioned, 1921 is a very strong technical point. If the market cannot go above it, it's a sell. You can see that. Now only if it cross above, it's a buy. And on Friday, we saw it trying to rebound over here, which it did. But today, something's not correct. It has went up to about a high of 1935 today, but it's not as high as the last Friday's high. And now it's trading below 1921. And if this is going to continue, then I suspect that it will come down all the way to 1905 level. So traders, you have to watch out for this. Yeah, very, very important. Now today, many market is closed, so I'm going to just go through the whole charts right now. Okay, let's go through this. Okay, so first of all, we have a pretty clear BNB on Friday, so that's why we need to redraw the chart a little bit. So this is done all automatically done by the system. So today the market opening price is above the pivot one, 33,059. So by right, we should see a higher upside. All right, let me change the color here. Yeah, just give me a moment. Okay, here we go. So as long as the market stays above 33,378, okay, the Dow Jones should be going higher right now. 33,498 will be the first target. Now only if it goes below the BNB RL 33,378, then the selling may bring it out to 33,218 for today. Now for me it's alright. The KSI is still green. KRW is red, so it's a bit mixed here right now. So I believe that it should be around this point for today. All right, around here. Won't be doing much. Huh? The Nasdaq, as you can see, is trading between the two pivots. Usually the market won't move much. KSI is red, but KRW is cyan. So again, a mixed bag here. Now, if let's say the Nasdaq to push higher, it will test MA 200 at 11,693. But if it pulls down, then 11,504 will be the first support. All right. And for the S&P 500, now S&P 500 is trading at 939.76. We all know that this Mike Wilson and friends is looking to short below between 4,000 points. So the KSI is red, KRW is cyan, mixed back again. So S&P now is trading around the opening price. So if the S&P continue to go higher because it's CCRY, then we can see 39.89. And if you go past it, then 34,005 is there. But if you ask me itself, right, there's a very strong resistance at 4005. I just feel that if the market cannot stay up and it pulls back below MLP at 39.38, I can see and foresee the selling coming back down to 36.88 level. Honestly, I think the market coming down to 36.88 is much higher than not. Because last Friday, the pump up was really ridiculous. It doesn't make any sense, and we know that it's very artificial. Now, the Nikkei KSI green indicator is cyan. That's why the bullishness is still there. So the Nikkei is going to aim for 27,064. Now, Nikkei broke above the BNB RL level, which is here, BNB RL level, on Friday, 26,530. So that's why you can see the upthrust strength right here, right now, right? So it's pretty clear on how we use our TWB indicator. Now, of course, many people likes our sharing on the currency. I'll do a bit right now. For our currency here itself, for dollar yen. Okay, let's be our hang over here. Let me just bring in. Okay, wait a minute. Okay, here we go. All right, dollar yen today is trading between the two pivot, and this is an inverse pivot. So usually inverse pivot, there'll be some resistance at 130.13. So likelihood you bounce around this area between the pivot 2 and MLP, which is now you're seeing pretty clear. Yep, it's doing that right now. And the KSI is great right now, so that means that there should be some selling pressure in the market. So let's wait for a while and see anything coming from that. Now, pound has rocketed to hit my 124 level. Now, we call for buy since here at 120. And every time when it crossed the BNB RL, it was an ended buy. KSI was green. So 124 has been traded. So it's time to take some break, okay? Don't chase, wait for a while. That's my advice, huh? Now, Euro has created a new BNB about a couple of days ago. KSI is green. Well, I think that Euro at now 108 is kind of high. If you look at it carefully, guys, Euro was at basically 95 at one stage, and now it's at 108. We all know that the dollar has come off a fair bit. That created the current situation. Let me bring the dollar in right now. Let's bring dollar. So for the dollar itself, right, let's take a look. Here we go, the dollar. Where are you? Now, the dollar is still coming down, all right? This is not a very good sign for the dollar. Let me just compress the chart a little bit. Okay, so the dollar, basically, I thought that it would be supported at 102. That was wrong. I apologize on that, because I thought that that will be a very good base at 50% mark. But we can see at the moment now the dollar continue to slide lower. So I won't be calling for buy on dollar until I see it going back here, because it can really slide down to $99 if, let's say, the dollar continue to go down. Now, one reason the dollar is coming down is because of a lot of companies or countries, are all dumping the US treasuries. And that is one good reason why the US dollar is coming down. So the good part is that the dollar is coming down. The bad part is going to cause a lot of problem to other companies, other countries, because that if their what they call their holdings in US dollar, this is going to hurt them. Isn't that true? Okay, so that's one reason why. So this is the euro. Let's see what will happen. Let's look at gold right now. Now, to me, gold is kind of there could be some pullback soon, yeah? The gold resistance level is 1925, and it's went below it. Though KSI is green and KRW is cyan, I just feel that gold can come back down to 1912 today, okay? 1912 today, because gold at the moment now is overstretched, and I believe a pullback of good strength could actually be beneficial to it. So 1867 will be my target for gold if, let's say, it loses 1900. Now, for silver, I already told you guys wait for a while. Now, silver has a very strong support at this BNB support level and that is at 23.21, right? The level I mentioned. So if you want to buy some silver, look to buy at 23.21. If you can wait a bit more, then 22.39 will be a better level if you ask me. And like I said before, long-term wise, I'm still very bullish on gold and silver, and I believe gold will hit 2218 by this year. All right, this is my personal opinion, and hopefully it really happened. Now, I know that Bitcoin is strengthening right now. Wow, amazing. All right, I'm pretty, I was correct on the upside until here, but I was wrong from then on, because I don't think that Bitcoin is any instrument to be holding on. Now, Bitcoin is trading now at 22,729, and it's trading between the two pivots, so I can say this upfront, unless it loses 22,000, if not, this guy is going to be sideways. Now, KSI, KCX, both of them are very bullish, so there's no reason why we can see Bitcoin coming down at near term, unless you are speculating it with a tight loss, then it's fine. All right, guys. Now, once again, I'm probably the only trainer in Singapore doing a MAO market recap on the Chinese New Year 2E. But the thing is this, 2 sorry. But I still think that, right, this is a lot of commitment and passion I have. So do me a favor, leave a comment in the comment box. And those who are being selected as well will go for a great lunch next week. All right, this is Cal signing off. Have a great day. Bye-bye.